Hi everyone, let's go over my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Started with the low time frame bearish scenario where we still expect a move to the downside in a wave C when we are then looking for an expanding flat ABC to the downside, where the most common target for wave C is in between the two 1.618, which is between 29.1k and 28.3k, which is also in nice confluence with the support area that we have over here, the blue box around 29k, between 28.8k and 29.1k. A rare target for wave C is the 2.618 with a support area in between the rare target and a common target, with the support area being between 27.8k and 28.2k. If we look at this move towards the upside, it is quite interesting though, because the question is this a three-wave structure? Because inside a wave B, you're looking for a three-wave move to the upside, because an expanding flat is a 3, 3, and then an impulsive 5-wave move to the downside. Inside this wave B, we're then looking for a first three-wave structure, a second one, and then you're going to be looking for another three-wave structure to the upside, and then a W, X, and then a wave Y. However, is this impulsive structure to the upside by itself already a three-wave structure, or can we expect something like this to happen? Well, that is yet to be seen. This support area over here is an area that I'm looking for between 30.5k and 30.7k, which for me is very important to determine potentially another move to the upside for then a zigzag in wave Y, which is then a 5, 3, and then another 5-wave move before downside, or if this is the high in this scenario after wicking one of the highs of the 2022 range. Now, this target area that you see for wave B is between a 1.236 and a 1.38 for the blue wave B over here, pulled from the high to the low of wave A, after which you expect a move to the downside. It has been hit, so price could move to the downside in an impulsive structure, but that means you want to see an impulsive move, and we're going into that in the micro scenario in a second. If we then go to the more bullish scenario, then we have a WXY that is already finished with a 3-wave in W, 3 waves in X, and then a very long triangle in wave Y. The triangle isn't the nicest. A couple of things I wrote over here and also explained in detail in the previous video, but I'll quickly summarize that this wave B doesn't look too nice. It can be a zigzag, as 4 out of the 5 waves in a triangle have to be zigzags. This wave B can be a zigzag in a wave A, B, and then a wave C, but it's not nice, especially because of this structure in the middle and then an A, B, C. But this wave B then consists of this structure over here, which is very expanded to the upside. So that doesn't look too nice. Possible, not nice. This looks very much like an impulsive structure instead of a zigzag. Volume wise, wave E has quite a lot of volume compared to the rest of the triangle, not compared to wave A, but to the triangle over here. And you actually want to see volume decreasing, so that's something to pay attention to. And finally, in this wave E, you're going to be looking for another zigzag in a 5-3-5 and then an A, B, C. But this wave C over here did not take the low of wave A. And therefore, you actually can't really call it a zigzag, because a wave C has to end behind or after, below in this case, the low of this wave A. If we then do look towards the upside and look at an impulsive structure over here, there's two options really. Either this is somehow still part of a wave 4 and then a wave 1, 2, then we have a big 3, 4, and then eventually a wave 5 to the upside, where currently price still did not close any candles below the 0.5. It's been tested like once, 2, 3, like 4 times, bouncing on the 886 as well all the time, taken from the low to the high. And so far, so good. As long as candles are not closing below the 0.5, a potential wave 4 is not invalidated, but it is starting to become a pretty long sideways structure, especially compared to this wave 2. So preferably, this is not part of a wave 4, but this over here is then a wave 4 in this impulsive structure, and then a wave 1, 2, and then another 1, 2, 3, 4, 5, 4, 5, something like that. And this is then the beginning of a corrective structure to the downside as it stands now, or that impulsive wave C, and then potentially a first structure 1, 2, and then eventually a 3 to the downside. Now go into the micro scenario to deep dive into that suggestion, right? Because it's actually been I wouldn't say confusing, but of course price hasn't changed from the moment I made my 1 p.m. video. It's literally at the same price. But what we are looking at over here is this to be a potential impulsive move to the downside, right? And then you have another potential impulse here in a 1, 2, 3, 4, 5 wave move to the downside, or wave 5 ending over here. It doesn't really matter for the scenario per se, because from an Elliott Wave perspective, the 886 pulled from the low to either this high or this high also doesn't matter, because the 886 is around the same level here. Price has now ranged on top of the 886 for basically the whole day. If the 886 is hit, you prefer to see an immediate rejection and back towards the upside if you are going to be looking for bullish structures. The fact that price ranged on top of the 886 for so long indicates that there's a higher probability for a bearish move to eventually more downside. Even if price would move to higher prices, the probabilities are still, from an Elliott Wave perspective, higher towards the downside because price has been ranging around the 886 for such a long time. Also, you see that I circled this wick, and that's actually important because if this is a move to the upside, either a 5-wave structure or a 3-wave structure, doesn't really matter, but we have this move to the downside. Now, this could be potentially a wave A in a 5-wave move, then an ABC zigzag, and then you want to see another 5-wave move to the upside. So from this move, the move to the upside was potentially the beginning of another wave C, and then an A, expanding flat B, and then a wave C, bouncing on the 886, which is a more common target for B or X, and not for a wave 2 in a 1, 2, and then a bigger 3. Perfect, right? But what happened is, if you want this to be the start of a new impulse, the low is not allowed to be taken. But that's exactly what happened over here. So that is when I was updating the group, I said, well, the fact that the low over here got taken increases the probabilities for eventually more downside. Because if this is an A, B, C, right, then, well, you expect an upside, but the low has been taken. But now the other problem is, this range over here is very difficult to count in the same corrective structure as this area here. So if we look at this to be an expanding flat ABC, right? This could be the first structure of a corrective move. Then you're going to be looking for a second structure and then a third structure. But this wick over here did not even reach the 0.618 taken from the high to the low to, let's say, this high over here, you know, and then pull it on the wave wide target area. The 0.618 over here has not even been reached, which is a minimum target for a corrective structure. And besides, if this is a corrective structure over here, and this is the second structure followed by a third, just look how small this little structure is compared to at least this big one over here, right? So a couple of things are not really matching up, and also this comes together in probabilities, with then the probabilities at the moment being higher to eventually move to the downside. Not saying we can't first move up, but I'm saying that the probabilities are higher to move down first and take this low than taking this high. That's the probabilities on the micro at the moment, because of the low over here and because of price ranging on top of the 886 for such a long time. Interestingly, it might go against the bullish CVD divergences that we have over here, where price is making higher lows but lower lows on the CVD chart. Higher low from this range over here to the low, as well as more locally over here, where the first target would be this high and the second one would be the high over here. So from a bullish CVD perspective, or actually CVD perspective, we have more upside to come. So it's very interesting, because Elliott Wave probabilities would say, hey, downside currently has a higher probability because of everything I explained. CVD says, well, actually the preferred scenario is the upside. It has to be said that if we go to the AJGR chart, which is the CVD chart over here, the two lines on the chart, then what you can see is price over here was very close, or created bearish CVD divergences, maybe with this little range over here, because you can see that this wick over here in yellow went above this little, or this high I should say, went above this high over here. So this green candle creating a lower high with the candles over here, but a higher high on the CVD, which can be that bearish CVD divergence we're looking for. So this high, lower high on price, higher high on the CVD, bearish CVD divergence. And you can also just in general see how high CVD is over here compared to the highs we made over here, right? Compared to this bit of price action where the CVD line in yellow was over here, well, this CVD line little bit is already higher. So you can argue we have some bearish CVD divergences. It's not the cleanest with like a little structure in the middle. Would have been nicer with an actual high, but we do have, or you can spot, bearish CVD divergence. Now the moment this low is taken over here, we wait and see, right? Maybe it continues to the downside where we have this support area between 30.5k and 30.7k, which I think is very interesting to decide the bearish or the bullish scenario on the low time frame. Then if we talk about the lower time frame, my preferred scenario is for price to move to this area over here. In whatever structure it does, no idea what I just clicked. I clicked the wrong button there, the pitchfork. I prefer for price to move to this area over here. Going up or down first doesn't matter, but not taking this high yet is preferred. So preferred is first taking this low, then we wait and see patiently tomorrow morning with a new update to see what has happened, if it takes the low or not. This area is interesting for then a bounce and potentially then another wave 3 to the upside and then a breakout. Or if we bounce over here to the upside, it can be a wave B or a wave Y, right? And then a zigzag A, B, C to finish B. That's the question. That's the move to the upside. Or we bounce for continuation to the downside. So in all scenarios, I'm looking for downside first and then a bounce over here. And based on the bounce, we decide what's going to happen next. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.